Malaysia's entrepreneurial ecosystem is one of the most dynamic in the region, driving innovation and job creation. Yet, access to financing remains a persistent challenge, especially for MSMEs, mid-tier companies and emerging segments like the gig economy. These gaps not only limit growth, but also impact competitiveness in an increasingly digital and sustainability-driven economy. At the heart of efforts to bridge these gaps is Credit Guarantee Corporation Malaysia Berhad, an institution that has evolved significantly over the years to support businesses across the spectrum. Leading that mission today is Mohamed Nazri Omar, President and Chief Executive Officer of CGC Malaysia. Nazri, thank you so much for being with us today. Let's start with big picture, where do you see the most pressing financing gaps today?
Thank you. Assalamualaikum. Salam satu madani, Harith. Thank you for inviting me here for today's segment. It's an interesting question you raised because this has been talked about for many, many years and still is being talked about again. And CGC has been around for more than 50 years. We've done more than 500,000 SME accounts and more than 100 billion financing access, and yet we're still talking about financing gaps, right? And specifically for MSMEs. So when you deep dive into where these financing gaps are, of course they are across the segments, but there are also some pronounced segments that needs more help than others. And you touched on some of them as in a few minutes ago. One of those segments, of course, are the micro side. The micro here also covers the gig workers. And that's something new over the last 5 years. You've seen a lot more freelancers, not just the Grab drivers, they're also services professionals. And of course, the small segment of the medium-sized industries. There need to be a lot more effort into this, right? But there's also been improvements, and I also need to highlight that the approval rate for the MSMEs have improved to above 80% these days, right? But in terms of what else needs to be done, the developed markets, the approval rates are above 90%. So there are still room for improvement. And so when we deep dive to where most of these approval rates that needs to be supported some more, and where Credit Guarantee Corporation like ourselves comes in to help support this, will be to guarantee financing in the micro and the small segment, which is what we are seeing today. But there are also certain sectors in the economy that also needs more attention to. The high-risk sectors, if you may, right? The construction, the services sector, agriculture and whatnot. And when we deep dive into why these segments in particular need more help, it's not surprising. They tend to be without a track record that is sustainable over the last, maybe they just started less than 3 years ago. They also, because of services sector, they don't have a lot in terms of tangible assets that they can pledge as collateral for what bankers normally ask for. So naturally then, these are the segments that needs more help. And some of these segments are also quite unique. And I know you highlight certain segments like agriculture, weather prone. You highlight even the creative sector, the orange economy, it's very unique. So yes, the segments here in terms of financing gaps are variety, diverse, but there are also certain areas that needs more help than others.
Talking about CGCs, I mean, CGC's roles have been, the scope has evolved over the years. From your experience in the past few months as a PCEO designate, how has CGC's role changed? And also, where do you see it's heading now that you helm the organization here?
So, as I said, we've done a lot in terms of guaranteeing credit. We've done even some direct financing over the last few years. So we've set that foundation. But what we do see is to have bigger impact, especially in these particular sectors that is more pronounced, right? The approach has to be modified. And what I mean by that is we have to think of new ways to enhance the credit. We have to look at even the financing product itself that the bankers provide or the non-bankers provide. What kind of product is suitable for the gig workers and the small, medium size as opposed to the traditional corporates, right?
Untapped group.
Exactly. So some of them, the cash flow is uncertain. And the requirement of financing is very short, maybe less than 3 months. And so the product needs to be assessed what is appropriate. And then our guarantee needs then to be applied to what's appropriate for these market segments. So that's one way that I like to see how CGC can do something different. Of course, the other one is the outreach, and the best way to stress on this is, of course, a digital approach, because we cannot be everywhere at once. And so the outreach has to be improved further in terms of digitally, so that we can stretch our presence across the country better.
You're talking about outreach, and how about, I mean, in terms of bridging the gaps, you know, how the roles of CGC, number one, especially across different segments. You mentioned about MSMEs, mid-tier companies, and also now emerging segments like gig economy.
Yes.
How you dedicate and also tap those untapped group previously.
So first and foremost, of course, as I said just now, we have to do better in terms of outreach to these segments. So what we have done is we've set up a platform called MSME to reach out to this segment and get them on board, because MSME is like a supermarket funding platform, right? So people come in and see what is out there, options for them. Some of them could be financing. We are trying to do insurance as well, products for them to look at, as well as other information that they need in order for their business to thrive, right? And then we realized just recently that because of the gig segment, they have a different requirements and different needs. So we came up with this Gig platform as well. And lo and behold, the take-up is also quite interesting, because everyone in that segment wants to find some other solutions for them. So this is where I think things will have to be done differently, given that this needs now is digital, as well as the requirement of their financing is different. The outreach has to be better, and the solutions that we are going to provide through these platforms also have to be targeted and different.
We know that the financial landscape is shifting rapidly, and of course on the, for example, like tighter credit conditions and digitalization, sustainability pressures. How is CGC adapting to these changes, and particularly as you prepare for CGC's 2026 priorities? Yes, credit appetite from banks will shift, right? Now, the thing is, we also have to reach out to non-banks, and that's what we started doing as well. So that the SMEs have an option other than just banks. They also have the non-banks. These are the P2P platforms, now the upcoming digital banks as well. So the risk appetite will be different across this, and we are there to support in terms of providing credit guarantee. Now, how we can do differently in this credit environment, when different people have different credit appetites, we also need to target these segments that need more help than others. And the risk appetite from us has to be more, right? So that we can take on more risks for these particular segments and help these SMEs tap into the financing market. Maybe my last question, Nazri, beyond financing, what support do MSMEs need to stay competitive and resilient, and how is CGC strengthening non-financial support through its development program?
That's a very good question. Especially as we know, the SMEs are new to the market, new to the businesses, and new to the financing requirement. So what we have done, and we continue doing, is providing financial advisory, business advisory, connecting them with the right business markets, matching businesses. Over the last year alone, we've reached out to 6,000 MSMEs through various events and programs of financial advisory programs. So we need to do more of this, but we also need to be more in-depth and targeted in terms of financial advisory, as well as ESG compliance. Because these two people need more help. They need more hand-holding. And so my team will be more dedicated towards providing services to help these MSMEs in these two particular segments in particular.
Talking about ESG, how do MSMEs trying to adapt? Because we know that their struggle is like day-to-day business, you know. So maybe you have some perspective, especially on the financing.
So you're right. They are going to be the segment that's just day-to-day, right? And their focus is more cash flow than anything else. But there are going to be some SMEs that realize that they have to depend on their vendors and their suppliers and their customers who are ESG mindset. MNCs, for example, or even now the mid-tier and large corporates who are serving these MNCs, and the vendors are SMEs. Right? So they also need to be aware what their customers are looking for, what are the regulators looking for, so that they can be ahead rather than behind and catching up all the time. So we provide that guidance. Some of them will not be as priority at the moment, but eventually they will realize as they grow, it will come into their business plan and how they're going to target their market.
Nazri, thank you so much for being with us. Of course, we've heard, how bridging financing gaps is not just about access to capital, but also about building resilience and also competitiveness for Malaysian entrepreneurs. Thank you so much, Nazri. That's all for now for Niaga Awani. All of this will be available on our digital platform, astroawani.com, and also all our